All right, guys, good morning once again. Let me welcome us to another exciting morning market review. My name is Emmanuel Odogwu. This is the morning section where we try to analyze the market for you every day, 8 a.m. to 9 a.m. One solid hour of intensive morning market analysis. We try to give you previews, review, tips, and tricks on how to navigate the market profitably. So, get yourself ready. We are starting immediately. Okay. So just like we always do, we try to look at the fundamental side of things, right? So fundamentals are the major movers, or if you like, the major drivers of the market. So as a trader, you're very good with technical analysis. That's thumbs up for you. But then you should also be good with your fundamentals, right? So the major moves that gives us the profits, right, is from fundamentals. So what we'll always do is we try to check fundamental events every day, right? So for you, you should also be checking it. So there are several websites where you can check it. You can use FS Street, you can use my FS Book, you can use investing.com, you can use tradingeconomics.com. So if you're hearing some of these websites for the first time, you may just need to write them down. Later, you can visit all of them. Then you can use the popular one known as the forestfactory.com. So there are several websites. So we checking this website. We're checking this website to see if there will be high impact news, right? High impact news. By high impact news, let me do this for the benefit of those joining us for the first time. High impact news are high volatility news, right? High volatility news. News that has the capacity to shake the market or to move the market forcefully up to 100, 150 pips in a particular direction. And those are the kind of movements that we wine and dine on, okay? So they are the high impact news. So we also have low impact news. Okay, so we don't really look out for those ones. Okay, so let me share my screen so that we can dive into all of this. So uh, I've been able to share my screen. So this is forestfactory.com, right? Forest Factory is one of the easiest among all of the several websites I've mentioned, cutting across trading economics, my Facebook, uh, name them. All right, so this is forestfactory.com. So what you need to do here is just to check if there is news. So this is Monday. Monday there was no red news. So red news are the high impact news, please. That's our custom here. Okay, so we want to focus more on the high impact news. For today being Tuesday, the 26th of March, as you can see, we have yellow, 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 and low impact news. Okay, then, of course, this color brown are medium impact. Sometimes, depending on market sentiment, these two cannot equally move the market. For scalpers, it can equally move the market and give you something, okay? You can move the market and be able to give you something. Then, of course, for today, we have our high impact news comes by 3 p.m., okay? And that is the consumer confidence, okay? So consumer confidence is generally a survey, right? Asking consumers what they feel about the relative business condition, right? So and consumer spending, right? Consumers having money to spend, right, in the economy is a major mover or the major driver, or is what stimulates the economy. So if consumers don't have money to spend, if they are not confident about the economy, it means maybe consumer spending will start going low. And if consumer spending start going low, then of course the economy is being affected, right? Economy is being affected. So as you can see, we have that consumer confidence coming up by 3 p.m. So generally speaking, we're looking up for this area here. This area is called the actual. Actual is a result of the news. That result of the news, we're expecting it by 3 p.m. Okay, by 3 p.m. By 3 p.m. So that number will appear here, right? So generally speaking, if it is greater than the forecast, then greater than what is expected, is good for the economy. Okay, so it is good for the dollar, right? Good for that. So that means dollar has the potential of appreciating by 3 p.m. or even depreciating further. But from what I have seen, I think this is. I want to just make some guess, right? So it's most likely going to come out good for the dollar, okay? Because if you look at what the dollar did yesterday, we saw some level of weakness. So this might just augment for that kind of weakness we're seeing on the dollar, okay? Enjoy your meeting. So that's the market news. those of us just joining us right now,
Mute yourself.
okay. Guys, sorry about
Tell
that.
him to stop the noise.
Guys, sorry about that. I've been able to meet everybody. Okay. So for those of you just joining us, this is Morning Market Review. My name is Emmanuel Odogwu, and of course we are right now on the Forest Factory. Okay, so you're not really late. You're just right on time. So we're looking at the Forest Factory. So we are saying there will be a news by 3 p.m. Right, by 3 p.m. and that news will be on the dollar. Right. They are making a guess that news may just come out good for the dollar, so that the dollar can move, so that it can cover some of the weakness or some of the losses it went through yesterday. So that will be all for today. As you can see, for Tuesday, right? Then tomorrow we have CPI on AUD, right? So this CPI on AUD is actually by midnight 1:30 a.m. So you want to be very careful there, right? So you can stay awake to trade it, or if you have a trade on AUD, then you are advised to have a stop loss and a take profit on your trade, or you are advised to guard your trade very well. Okay, guard your trade very well. You can even edge in both directions. Okay. Then of course we have FOMC members speak tomorrow again. Okay, quickly, that will be all for Tuesday for the fundamental. I'll switch right now to my chart so that we can do some technical analysis. So guys, I've been able to switch to my chart. You can see my chart. Indicate you can see my chart. You can see my chart. Okay, please go straight to the chat room and then just type chat, right? Okay, yes. Thank you very much. Thank you very much. You can see my chat. Thank you very much, guys. You're doing well. All right, so just like I always do, I like to always start from the USD index, right? So let's look at the USD index. Let's look at the dollar index. Most of the currency we do trade has a lot to do with the dollar, right? It's almost like the whole market against the dollar. So let's look at what the dollar is doing. So we can see that the dollar has been able to recover from a lot of weakness that it went through the past few weeks ago. All right, so if you look at this carefully, you will notice the dollar on the H4 time frame has been diving until we saw this gap, right? From that gap, it started pushing to the upside. So if you look at it carefully, you notice that this market is largely on the H4 time frame is on an upward trend. But take note, after an expansion to the upside or after an impulse to the upside, we normally expect a retracement, right? So that's what the market, the dollar is trying to do on the H4 time frame. So we have impulse to the upside, taking out this high, and that's break of structure to the upside. Break of structure to the upside, indicating strength to the upside, right? So that's taking out this structure to the upside. It has broken this structure to the upside, market structure shift to the upside, and then we got to this point. Take note, after a major break of structure, or even just put it very straight, after a break of structure, we normally expect a retracement. So we expect the market to retrace. That is exactly what the market is doing. The market is retracing, which is good. The retracement is healthy. Retracement is good for the trend so that it can gather more momentum, so that it can have opportunity for a lower price, a cheaper price, so that more persons can enter buy to push it upward again. So retracement is healthy. So when you see the market retracing, so if on an upward trend the market is retracing, it means the market is moving downward, right? So it is moving downward, offering sell side liquidity, offering cheaper price so that people can be able to buy at a lower price. So really, at what point will it retrace to? That calls for Fibonacci retracement. So if I do a Fibonacci from this low to this high, why this low? This low because it is this low that is responsible for taking out this high, right? So you don't just draw from any low. So if I draw from this low to this high, I can see that the market has retraced up to, it has not even retraced up to 38%. Okay, so a good retracement we normally look at for is 38% of the initial upward or the initial expansion to the upside or to the downside, depending on the area. Then or 38% or even 61.8%. So this is the two level here. So we're expecting more retracement. But guess what? If there is a higher momentum on the dollar may not retrace up to 61 or this 62% you're seeing right here. May just do up to 38% and then start moving upward. Okay. So in other words, whereas there is strength in dollar, but for right now, it is going through some kind of retracement, right? So please, you have to understand that. So retracement can be seen as a temporal weakness. Okay. Temporal weakness. You guys understand that. Let me dive straight to my chart. So this is GBP USD. Okay, let's start from GBP USD. So yesterday we saw that the dollar was a bit weak, and that weakness is actually the retracement I just finished talking about, right? So okay, so this is yesterday. Yesterday being Monday. So that yesterday, GP took advantage of that temporary weakness, or if you like that retracement on the dollar, and it traded upward. So yesterday was bullish the for GPUSD. But take note now, look here, please, because this is not only giving you entries, this is also analyzing the market for you, making it easier for you to be able to pick trade even by yourself, right? So after this big impulse to the downside, as you can see, or this big expansion to the downside, right? If you watch carefully, at the bottom here, right? So we got what we call an order block. An order block is simply what we want to call an area where there is a large amount of orders, right? Large amount of orders. So, and if the market has been going down and then we see an order block, it means that order block will be a bullish order block, right? So it means the buyers will be waiting. So this is how to identify one. So quickly, this last candle at the bottom, okay, so this is the high of the candle, and of course this is the low of the candle. Please, I'm doing this on H1 time frame. You can do it on H4 time frame, higher time frame. Okay, so if you notice, after this candle we have a big impulsive move to the upside, right? So that is how to validate an order block, right? So it means over here the buyers we are trying to come into the market, and that showed in the next candle we have an indecision on the next candle. See, so this candle is actually a doji candle, a perfect doji candle in which the opening and the closing price are perfectly the same thing. Now, see, you can imagine it. After this long, powerful move to the downside, right? So how come we're having a candle with almost no volume, right? You remember the body of the candle represents the pressure, the momentum to the downside, right? But guess what? At this candle, at this very candle, you can see there is actually no momentum. It means the buyers were able to suck in the pressure from the sellers, right? So that's the meaning of this. Remember, I called this particular candle, the order block, right? Because it was from this particular candle that the buyers started coming in. Then it showed on the next candle. Then of course after that the buyers actually showed up fully, right? By pushing the market or by an impulse to the upside. Now, how do you take advantage of such kind of movement? So what you need to do is you wait for the market to retrace back to that order block, right? So after you see an impulsive move like this to the upside, the market normally retrace again. So if you watch this one, it retrace again to the high of this candle, right? Right, to the high of this particular candle. So this is where the buy is supposed to start coming in. Okay, so by please, from everything I'm showing, I'm trying to tell you that this is where the market actually reverse. Okay, you understand that, so that you can take that forward in all of your trade going forward, and of course start making good trade from there. So from there, that was where we saw this move to the upside. Then from there we saw this change of character, if you like, a break of structure to the upside. So the market broke structure again to the upside. That's another sign of the market is moving upward. Okay, so it gave us this high, broke the high to the upside, gave us this low, right? But from what we are seeing here, right here, the candlestick that is being built, they are choppy candlestick. They are not heavyweight candlestick, right? So if the market is building choppy candlestick, by choppy I mean small candlestick, It means it has equally broken structure to the upside again, right? Sorry, let me look at your chat room. Okay, the chat room, but you're asking which is the other block. Okay, the red candle there is the other block. Okay, this red candle, this particular one, right? So it's actually a bearish candlestick, but the buyer showed up in that bearish candlestick and confirmed by a retest of it. Okay, so the market forcefully moved up and came back and retested it, right? So you're also asking if yesterday's signal is still valid, right? So yesterday's signal can still be valid if all of the parameters, if everything you saw that validated the signal is still uh, valid. I mean, it's still the same way it was yesterday, right? If not, then it means the yesterday signal must have changed. Do you understand me? You're asking if yesterday's signal is still valid. If everything you saw that made you took the trade, if they are still there, they are still very much there, it means the signal is still valid. I mean, a support can turn resistance. If the support still remains support yesterday and today, then the signal is still valid. But if support has turned resistance, then the signal is no longer valid. Something like that. So I think Okay, I think if I just continue looking at this chat room, we're not going to do anything today. So I'll come back to chat room again, but let's continue. So I'm trying to say we are booking structure to the upside, right? We have booking again. This structure will be taken out. So these are signs that the market is about to turn. But I have a challenge with that. The challenge I have with it is that remember the body of the candle is the volume, and the volume is actually the pressure, right? The momentum to the upside. I'm not seeing very big, large candle moving upward, right? So that means